Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I'm recording this late Thursday morning, April 17th, because like the stock market, our offices will be closed tomorrow for Good Friday. We'll be back at it again on Monday. I hope everyone has a great long Easter weekend. The market was quieter this week. As I record this, we're down 1 or 2% in the major indexes, less so in the broader indexes. My thoughts really haven't changed. Near term, I think the odds favor, not 95% chance, but the odds favor last Monday's kind of puke low with the high VIX and the sentiment and the oversold, the new lows and stuff like that, is a near-term low that the market can work off of for a few weeks, okay? And that's what's happened so far really hasn't changed my mind. You get news-driven moves. You get up into resistance, you sell off, then you find some support and you bounce back. It's very tedious trading. I tend to let everyone else battle it out on a day-to-day basis just to deal with the volatility. Ideally, we've started some sort of bottom process, which, maybe consists of 2, 3, 4 weeks up and then maybe a retest or something like that, that gives the market more time and institutional investors more time to reposition their portfolios, okay? As always, we'll just have to see how it goes on a day-to-day, week-to-week basis. What's by far more important to me is the primary evidence, which is the trends of the major indexes and most stocks is clearly pointed down. Most everything is living below, 50 and 200-day moving averages. When they're not, it's not a completely defensive stock. It's an exception to the rule, and it's something to be flagged. And we are starting to see some stocks show relative strength. I'll talk about more than a few of them here today. But we're still seeing a lot of stocks, even the ones showing relative strength, will kind of maybe run into the 50-day moving average, which is a lot better than the market, but find resistance at sort of obvious resistance levels. So long story short, I haven't done anything. I might make a small move or two. We're 86% cash in Cabot Growth Investors model portfolio. If the market continues to stabilize or find some real buying here in the next, week or two, might I make that 75% cash? Sure, I'd say that's possible. But in terms of any real buying, in terms of starting to be aggressive or starting a buying spree, we'd obviously like to see the market, form into a real uptrend, which is probably going to take a little bit more time from here at least. Okay, let's hop in the charts. As usual, I'm using a product called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So we'll start with the major indexes as always. This green line, some people use the 21-day exponential moving average, whatever. We keep it very simple. We use the 25-day and the 50-day simple. But whatever, what you'll often see is the market will rally kind of into some of these moving averages during a downtrend and find resistance. And that's exactly what you've kind of seen here during this bounce so far. Okay, so we kind of rallied in toward the 25-day line and have backed off. I know there was news on NVIDIA, but the market was ripe for sort of a little bit of a short-term dip. But overall, you can see we're still, I don't want to say miles, above, but on a shorter term basis, we're miles above the puke low from last Monday. And even the lows from, Tuesday and Wednesday are still, I don't even know, 1,000 points down from here in the NASDAQ. Okay. So we're still above that even with this dip. And, this sort of hectic action, maybe a rally here, it's not unusual during a bottoming process to get that. Okay. Now, a lot of people say, well, what if we just kind of go up from here? Well, that's fine. Eventually our trend indicators will turn positive. That's what happened during the pandemic, and leaders will emerge and we'll be on it. But for now, we just like to play the odds, and the odds favor that. I just think near term, this low should hold for a while. I would say if it doesn't, if we come in next week and it's this, I would say that's pretty abnormally weak. That's not a good sign. I mean, it probably wouldn't change our stance because we're so heavy in cash, but that would be not the best sign, okay? I would say the odds favor though, maybe we dip here, then some good news comes out, they make a tariff deal, yada, yada, and we bounce around. Okay, that's all shorter term stuff though. The reason I play that out is just to, when you do get volatility, you don't want to say, geez, the market was up 4% today, or the market's down 3% today. You kind of want to have sort of the, where you are on the field sort of, in your mind. So it's just sort of, I'm expecting ups and downs here short term, but bigger pictures, intermediate term, like I said earlier, we're still below moving averages, and most stocks, I think in the S&P 1500, it was 80+% are still below their 50-day line. So, we're still buried on the chart, buried below moving averages, and it'll probably take some time. Just before we get in the other indexes, because they're all pretty much looking the same right now, our intermediate term model, the way it works is you want to see the index get above this 25-day moving average, number one, and number two, you want that 25-day moving average to turn up, which basically means the market has to be higher than it was 5 weeks ago. That's really what it means. And we look at it over a few different indexes, just so it's not just the NASDAQ or just, small caps or whatever. 25 days ago, I didn't count it out, but it's somewhere back in this prior sort of shelf area before we melted down on the tariff news. So, I mean, in theory, if we could hack around here for another week or two and then get higher, we'd be dropping stuff off down here, and that could create an intermediate term buy signal. I'm just sort of playing out scenarios here. Right now, we're still in sort of the baby step phase where we're trying to hold that prior low and work off of that for a little bit of time, okay? S&P 500, they're all, like I said, they all look pretty similar. You can see just this spike low was 4850, call it. We're at 52, almost 5300. So we're still hundreds of points above there. Doesn't mean it has to hold or anything, but we'll see how it goes. It looks like, to me, the short term should hold. Small caps here are weaker. Mid caps are a little bit weaker overall. They were a little stronger this week. New York Composite, that sort of thing. And it all goes, they're all on pretty much the same front. Growth funds on a very micro basis, some of them, I guess if you look at like FFTY, which is kind of the IBD 50, but it basically owns a bunch of, growth stocks. It actually has hit the 25-day line. Again, a little bit of relative strength, but I don't want to slice, count angels on the head of a pin sort of thing. They're all in the same sort of downtrend, okay? The other thing I would say is so far, I did mention, hey, when we get a rally, I've mentioned in the past, when you get a rally here, or at least a bounce, right, in the market, this is the QQQ, the NASDAQ 100, is it growth stocks that are popping? Is it everything? Is it just defensive stocks? Now, I wouldn't say, it's been just defensive stocks, but when you look at something like the XLP since that low last week, it has certainly been much, much stronger than the market. There's been a pile back into sort of defensive-oriented names. And just as an aside, I'm not going to do it in this video, but I've just been running a lot of screens for like Top 10 Trader next week. And I mean, I run them a couple times a week at least anyway. But it's just littered with, like here's the XLU, the utility names, and the, some international stuff too, but it's like big, solid, good balance sheet companies, that sort of thing. Okay, here's the utility fund. So at this point, listen, the tide is still going out. The trends are still against you if you're a bull. And there's, money moving into defensive stocks. That can change on any day. It might not change for 2 months. It might change next week. Like I said, you just kind of have to take it day to day or week to week, okay? As for, I just want to mention this because it's probably worth watching. This is interest rates. Again, very volatile, and, is China dumping treasuries and all this stuff. I would just ignore the news. I would say the good news recently is after this spike high last Friday, you have gotten kind of a nice backing off phase. So where are we? Kind of in no man's land, but that's better than interest rates spiking. Obviously, if we saw defensive sectors soaring and interest rates soaring, that's plus the tariff, it's going to be a headwind. But it's just something to keep an eye on. I don't have a great conclusion for you right now. But if we come in a week or two and it's back down here, or if we come in a week or two and it's way up here, it might, tell you something in terms of, whether an extra breeze is going in the market's face or from behind, okay? One thing I would just like to say is, so I mentioned last week, there was a couple of stocks and I'll mention a couple more today, that have gotten killed but showed like very, very, very early signs of bottoming. I said I wouldn't touch them. But one thing we're seeing is like, this is Wingstop, which I think is one I mentioned, which was just at the time it had rallied. Yeah, ended up rallying 4 weeks in a row, which was better than the market had just been cascading lower. So it was like showing a little bit of relative strength. But what happens? It hits its 50-day line this week. And actually, let me go back to the weekly. Sorry to keep hopping between charts. But, as I record this, it's down almost 9% on the week. So and this is one example, but even things that are showing relative strength, they'll bounce into like prior highs and then, reverse a little bit. So we're still seeing the selling on strength when investors are getting the opportunity to get out of something at an obvious resistance level, which could be a declining 50-day line, could be a prior high or whatever. We're just seeing that kind of across board. This is one small example. So this is another reason why, even though there's some things showing relative strength, I'm not eager to like run out and, buy them right here, okay? The other thing I wanted to mention is, and we're going to get into relative strength, but let me just do this real quick. So basically about 5 years ago, we had the pandemic here. That was actually Wingstop. So here's your crash. And then you ended up, take my word for it, but you ended up basically having a little bit of hesitation here, but basically a V bottom. Can that happen this time? It can definitely happen this time. Anything is possible. I never rule anything out. I would say last time, though, some stocks we were lucky enough to own actually into the crash. A lot of the work from home, the cloud, they called them the pandemic stocks at the time, held up very well. This was Teladoc, which looks hectic as hell, and it was. But this was during the crash right in here. The market was doing this, and this stock was holding the 50-day line. It ended up having a big run after this. Of course, it's had an even larger fall since the pandemic, but it was a great stock to own. DocuSign, a lot of these things like got hit for a week, held maybe longer term support, and then snap. Look at this thing, hit new highs 2 weeks later. We're not seeing that right now. Could that change like a week or two from now? All of a sudden, some of these names that have held up, like the medical names, boom, 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 they start popping. We could. I'm just saying right now, we're starting to see some relative strength. I'm not having trouble filling up a watch list, but I wouldn't say many, if hardly any of those stocks are literally at legit entry points. Like, hey, this is legitimately a nice breakout, base formed, breaks out on earnings or whatever. We're not really seeing that quite yet. Again, just another, this is all sort of tertiary, reading the tea leaves, but at this point, it's really just about, I think, a little bit more patience and just seeing how things play out, okay? In terms of stocks, I wanted to mention Uber, which is a name we own. I think it's a great story. It's been held up now for about a year, okay? Initially on the Tesla robotaxi and all this stuff, sales and earnings and cash flow have generally been fine. I mean, maybe there was a little bit of a hiccup, but it's just been growing very nicely. And it's basically etched this nice, year-long consolidation. And a couple of things I would mention, up and down, but number one, this was the biggest weekly volume on the entire base. I think it was on news that somebody took a position, some, hedge fund or whatever. And since then, there's been no above average selling volume on the weekly chart. And then when it did get hit with the market last week, it did find a little bit above average volume support. And it's actually working its way higher this week despite the market. Okay, so the picture is there. Again, stuff like this is back into resistance, which maybe hits the stock again, maybe it doesn't, but certainly a name I'm watching. DoorDash, loosely in the same group, at least for delivery. I keep mentioning this. To me, this looks like a classic double bottom base. This volume is a little bit off because there was an S&P. It was added to the S&P 500. But even so, there was distribution off the top, don't get me wrong, but the stock is holding up very well. Again, not to keep sounding the same horn, it's kind of right into resistance. The fact that it touched its 50-day line is certainly a sign of relative strength. But what you'd really like to see is some of these names pop, from here. Not that that's an all-time breakout and we're off to the races, but that would be sort of the next step in the repair process, saying, oh, okay, now institutions are actually not selling at resistance, but they're buying through it. You know what I mean? They really want to put on positions, okay? But Uber and Dash look good. Charles Schwab is not really my kind of stock, although I will say this. They have a pretty good earnings record and then pretty big earnings growth projected this year and next. I don't know if I'm not that close to the company, but certainly compared to most financials, the stock's been holding up pretty well. It's not going to be the most dynamic mover, but I don't know. Sometimes these things, if you get a big decline and sentiment gets washed out, which it's already pretty far down there, you can kind of see a nice turn up in business, whatever. So Schwab is obviously a big player in the group. Nice bounce back there. MRX, I think I've mentioned, this is more of a British kind of a market maker, liquidity provider to a lot of commodity, that sort of areas. Stock's been in a nice uptrend and just refuses to die. Now, it's all over the place here. Every day it's like a lot of stocks up and down like the market, but certainly worth flagging. It's a pretty good story too, okay? Eli Lilly, just flagging it today. It did announce positive trial results, so the stock is popping. But the reason I'm flagging it is it's today, but it's part of this longer term structure. It did have a shakeout below the lows during last week's mess, which kind of resets everything from a quote unquote base count perspective. And now it's bouncing back. Would like to see a little bit more volume this week, but last week was supporting volume, and now the stock is back to within 13% of its high. So this could be a name that had a huge run, resets, and then maybe can get going during the next advance. Just worth flagging, okay? A lot of these things have sort of these double bottom patterns. This is Take-Two Interactive, shakeout, and now right back. Obviously stronger than the market. This is one of the few that looks like a legit, say something came out this weekend, it's an Easter present for all of us, and the tariffs are forgiven or whatever, and the markets go as wild. It's a V bottom. I mean, this looks like one that could legitimately just break out on the upside now. Netflix, I know you all love $1,000 stocks, but again, double bottom pattern shakeout. You'd like a little, like I said, with a lot of these things, a little bit more time and seasoning and tightness would not be the worst thing, but the market doesn't care what I think, right? So if this thing really got above the 1,000 level, again, I'm not saying it's off to the races necessarily, but certainly would be the next step higher. Now, as I record this, they do have earnings tonight, so we'll see what happens on Monday since the market will be closed. But if you got a big, strong earnings gap up here, it certainly would be, mega cap name to watch, okay? Still seeing a lot of resilience in the medicals. There's a lot of, I don't want to keep mentioning the same names. This is ADMA Biologics. Again, it's not my ideal situation. The stock had such a big, it kind of came out from the graveyard. It was a $3 stock, and it went up sixfold or whatever it was. And it had a pretty deep correction, but there's no question that there's been some supporting action since then. Tightness here, a shakeout, that was a couple months ago on earnings, came back. And it's actually kind of, again, this is kind of what you're looking for. It sort of etched this resistance area, pulls back normally during the market's recent weakness. And as soon as the pressure comes off, what does it do? Not just bounce back, but actually hit a higher high. And now it's, it's consolidating the last couple of days. So just step by step, this is kind of how you track things on a day-to-day basis. So that looks pretty good. Garden Health, this is another, this one hit a higher low, which is interesting, kind of like ADMA. It's hanging right in here, starting to tighten up. Another week like this, I would love to see stocks tighten up. That would tell me a lot, if the market started acting better and you started to see these leaders tighten, or potential leaders tighten up. But again, this could actually stage a legitimate breakout above 50 if, the world turned right side up. TG Therapeutics, I've mentioned 100 times. It's not really a base, but it's just sort of like it already broke out. It's pretty much holding up. It's above its 50. I don't even know if it closed. Maybe it closed barely below its 50-day line once, which is like rarefied air in the market. I think at the lows last week, 95% of stocks were below their 50-day line, and most of those that weren't were like gold stocks. So, clearly showing relative strength here, clearly showing buying once the pressure came off the market for a couple of days. So let's see if it can continue to act well. On the more defensive growth side, this, OLLI's bargain outlet, OLLI, just kind of a nice consolidation in here. It does kind of have this stair-step pattern. So I don't know, maybe it's not really a trender, but it has in its former life, like a couple of years ago, we used to follow it more closely. We follow it now, but when it was a younger growth stock, it did trend. So, maybe this is just coiling up for a nice uptrend with consistent earnings growth that beats expectations or whatever. But either way, it's a nice consolidation. Clearly a lot of supporting volume down here, which is good to see. And then a couple others that are just sort of seen here. This is MP Materials. This will be news driven. It's kind of a rare earth stock. It's not a fundamental story, although the numbers are improving. So it did pull back here. It gapped up because China says no more rare earths for us and all this. It's an American company. You can see it's just, the other day it went from 25 to 30, in one day. So, let's see how it does. Again, it would be nice if it could settle down a little bit, but certainly acting well. And then last but not least, just kind of as I run through screens, I tend to widen my screens now just because you don't know. Like there might be some stuff that's been out of favor for a while like this. Hopefully maybe fertilizers that kind of come around. Fertilizer is not going to be the core of my portfolio. But this is Mosaic, MOS. Some of them don't look as good, but you can just see the things have just been, almost like a impressive downtrend, so to speak. But if you really do look at it, it's been kind of, over the last, 6-9 months here, it's been finding support at this level pretty consistently. And when it knifed below there a couple times recently, it's bounced right back. You did have over the top volume last week on the recovery from the prior dump. And, you have seen some decent buying volume in here. Is there resistance up here? Yes. You know what I mean? So like everything else, it's not like it's free and clear, but Mosaic and some of the other fertilizers, some, not all, look like they might be bottoming. And after, they do have the ability just to pull up the monthly chart. This is Mosaic's long-term chart, so it hasn't gone anywhere long-term. But you can see for many, many months, this was after the pandemic crash, it trended higher. Obviously, it's trended lower for 2 or 3 years here. So if you do get a confirmation, I remember this run in 2007 was amazing for the fertilizers. These things can trend for 6, 8, 9, 12 months, 24 months, stuff like that. So anyway, just an idea there. But back to the market. The good news is so far, if you think about it, this is the NASDAQ. This is last Monday. So we're, 1, 2, 3, 4, 5, 6, 7, 8. So we're 9 days into, if you want to be optimistic, say, hey, we're in a bottoming process. We're 9 days in. Generally speaking, which is a very, 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 very general statement, if we're in a bottoming process, 4 to 10 weeks long sort of thing. Maybe we rally up here, we're back down here, maybe at the same levels we were last week, but the news is much worse, the economy is worse, the trade war is worse, whatever, sentiment is worse, and that can kind of put in a final low. We'll have to see how it goes. Maybe we have to hit a lower low and then build the bottom. You never know. But 9 days in, I still think we're holding this low pretty well. I would say if we really melt down from here, it'd be abnormal. But so far, I haven't seen anything that's told me that, last week's low isn't going to be at least a low during this move here, that the market can at least rest for a bit, and that some of the best stocks can provide feedback to us, like that they want to go higher if the market will let it, and go from there, okay? But as an intermediate and longer term player, listen, I get it. If you're a salesman, you're supposed to sell. If you're a manager, you're going to manage. So if you're an investor, you want to invest. But, a lot of times the best investment is to do nothing and to pick your spots, because a lot of the gains tend to happen in relatively short periods of time. A lot of the gains might happen in 3 months out of the 12 months of the year. So you just got to be ready for that, continue to build your watch list, and I think stay very close to shore with a lot of cash until the trends change. Okay, that's all the time for today. Again, have a great long weekend, and be sure to come by again next week for another Cabot Weekly Review.